Hello traders. Now when we talk about the natural indicators of market, we have two. We have market structure and price action. So still on market structure. So in this video we're going to talk about the types of market structure, their categories, and internal and external swings. Okay, so as usual, the types of market structure, there are majorly three. You have the trending. The trending one consists of uptrend. The trending one consists of uptrend. We have uptrend. We are creating a high, a low, a higher high, a higher low, like that. Then you have the downtrend. The breakout structure down, it is down, and we are having lower high, lower low, lower high, lower low, as usual. Then another type of market is the range. This type of market here, in between, something like ranging. We have support and we have something like resistance. Price tends to bounce from here, again bounce back from here. Okay, that's the ranging. And the third one is the shopping market that has no direction. Okay, so those are the three types of markets. Trending consisting of uptrend and the downtrend. We have range and the shopping market. So that the categories of market structure, they are actually three. I have basic structure. Now this is how basic structure looks like. Basic structure looks like this. As you can have in an uptrend here, you can see we have a high, okay, a little. So in an uptrend, we have a high, low, a breakout structure to upside. That means this is uptrend. We're in uptrend market. This is the basic structure that you can easily see. Okay, and for a downtrend, this is the basic structure that you can see. We have a high, a low, a lower high, a lower low, a lower high, a lower low. That is it. And continuation with breakout structure to the downside. That is the basic structure of market structure. Now look, this is not what you're gonna be finding on the chart. It won't be simple as this. What you're gonna be finding on the chart gonna consist of what we call internal, as here gonna consist of what we call internal and external swings. Okay, now what are swing points? Swing points, I'm talking about these, like these points. These are swing points. These are swing points. We have that swing point. We have here another swing point. Okay, those are swing points. We have another swing point, and these are external. So we have internal and external swing points. See, and this is a swing point, 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 and continuation. So there are really big difference between these internal and external. Internal swing points does not change the trend, okay, but external ones changes the trend direction. Okay, so this is the advanced structure. This is the kind of market you're gonna be finding on your chart. It won't be simple like in advanced. This is the kind of chart that you're gonna be finding on your chart, as I can show you here. Okay, we're gonna go to the live chart and we see how it appears. This is it. So let's start from here, from this point. You have had here, this is from this point. Let's use this is our high. Okay, price came here and it turned. So turning points are what we call swings. So from this swing, okay, So this is a high, this is a low. So what happened? We broke on this high, isn't it? What does it confirm? It confirms that we are in a bullish market. Okay, we are buying. So now that becomes our break of structure to the upside. When we break structure, what do? We first mark this last swing point that caused the break of structure. Okay, why? If price comes back and breaks this, we shift back to selling to a bearish market. After that, we need to know the swing point that is going to lead to a pullback, because what we know from market structure, whenever I break a structure, we expect a small pullback before continuing in that same direction or shifting or reversal. So this is the swing point that has led to a pullback. I can say this. Now let's say as all this chart is being seen from the 15-minute time frame. Okay, now all this is what is happening here. Can you see this, how price is reacting here, making internal, this is internal change of character. So lower low, lower high, lower low, again another market structure shift back to uptrend. Okay, so when you're marking market structure, you need to differentiate between internal and external. These all happening between this swing and this swing, they are internal, nothing they do change. Okay, they change nothing, So this is also our swing point. That is also our swing point. Okay, so now look, we broke on which side? This side. Broke to the upside. So if you keep on marking these internal, you're gonna be losing. You're gonna think the market now has shifted, now we are looking for sales, you get out when you are still buying the market. Okay, so this had been our trading range, so the market tends to come back to the discount most of the times to trigger out those buying orders. Okay, so that the market can continue. Let's say taps into our point of interest, shifts back, continue the upside. Now look what happens. Whenever market breaks structure, what we firstly need to look at is what swing point has caused the break of structure. Now here we have two. We have not two, there are many. This is a swing point, it is internal. Okay, this is a swing point, 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 this is a swing point. Now we need to get to know what swing point really caused the break of structure. We have this one, we have this one. Now what you need to look at when you are given an uptrend, you look at the last one or the lowest point price reached before breaking. Now when you look at this is the lowest point price reached before breaking. So now that becomes our swing low. Okay, and this becomes our external. Okay, this is external swing point, this is external. Yeah, that is external. So after that, so now we are waiting for for a pullback. Now we get our pullback at this point, price starts to pulls back after breaking structure at this point. So we need to get our trading range like this. So I've got our pullback. So when price comes back and takes out this low, that means we have shifted, taking it by a full body, not a week. We have shifted from buying to selling. But when price stays inside this, nothing we do with our trending direction. This is just internal. You can see market shifted back to bearish, inside bearish again, shifted back to bullish, continued, okay, until it broke structure. And that is what we are interested in. Okay, we get another break of structure like that, confirming we are still shifting. Now look, after break of structure, what is next? So we have seen price from our trading range from this point to this point. Price has really retraced. Now we have something here I don't want to talk about right now. So price can react from, maybe here there was, let me say a higher time frame demand, okay, like this, the liquidity sitting above it. So this kind of liquidity was tapped into our point of interest and continued the trend. So after breaking structure, what we need to look at first is what swing point really has caused this break of structure. When look, we have this swing point, we have this, we have this, we have this. We look at the lowest before breaking. The lowest is automatically this one, is that one. So that is our swing low. That is our swing low point that has caused break of structure. Now wait for a pullback. We get a pullback from this point, okay. Now what are we interested in? We are interested in to see that price still respects our trend direction to continue buying to the upside, okay. When you break this, we continue buying. When you break this, we shift from buying to selling, okay. We turn to a bearish market. Now look what happens next. The price comes back and sweeps out to this low, okay. This low gets swept out. So what do we get? We get what we call market structure shift. So we have shifted from buying back to selling, okay. Now when you have been using market structure to maybe take a trade, you may find yourself, you have got what we call something like loss here. The market has shifted on you, and that is really okay with it. The market has shifted on you. You take a loss. Okay, look, those are external. Now when we take a loss, okay, we have shifted, okay. This is the swing low. Price again starts pulling back. Now we know we are selling. When we are selling, we're gonna be targeting this low, okay, this low. That is it. So we get another break of structure, pulls to a certain level and break structure. So after breaking structure, do you expect? Still we expect price to retrace a little, okay, to retrace a little. When it is retracing, you're gonna see that something like internally we were seeing something like uptrend, which is not uptrend, okay. You see, can you check on this? Now this becomes our lower low, lower high, lower low. That is the external swing point. This, as we have shifted, we have this that has caused a pullback, also leading to a break of structure the downside. Simple like this, okay. Simple like that, you see. So now when you're looking at this inside, what do you see? You see something like we are in an uptrend, but this is a short uptrend. This is a pullback, okay. We're just pulling back so that we can trigger what we call selling orders, okay, in the premium, so that you can trigger selling orders and we continue with the bearish trend. So that is it. This is the candle market you're gonna finding on your chart. You're gonna be looking like this. gonna be consisting of internal and external swing points. Now what do you need to know? External swing points changes the trend. They decide where we are heading to. Now these internal, these inside ones, these one changes none. They're just waveform. Okay, so you need to be knowing how to mark a market structure correctly so that you avoid being wrong most of the times, because if you are still trading this you're gonna be getting out most of the time. So that is it. Let's go to the Leo chart example and we mark the chart. Okay,